What is going on, investors? Hopefully, guys are doing well out there. Today, I'm going to reveal my top 5 dividend growth companies that I invest in, plus a bonus company that I think will become an outstanding dividend growth company for many years to come. This strategy is particularly attractive for long-term buy and hold investors like myself that want to reinvest and compound those growing dividends over a long period of time. Now, the first company that we'll look at today is Visa, ticker symbol V. Since 2008, this company has consistently raised its dividend payment, with the most recent payout increasing an impressive 17.98%. Currently, the dividend is only $1.80 per share, but that doesn't tell the entire story. Shares of Visa are up a whopping 1,322% during that same time frame. So while Visa's overall yield would actually get ignored by most dividend investors, given it's under 1% for most of the company's entire history, investors have achieved spectacular returns over the past 15 years by investing in Visa. And there's every reason to believe Visa will be able to continue growing its dividend payout in the double-digit percentages for the foreseeable future, given the fact the company is expected to earn over $8 per share in 2023, or over 4 times the amount of the current dividend. Next company on our list is Costco, ticker symbol COST. Now, for a company known for cheap prices and actually paying employees an above average wage, Costco runs one of the most profitable and shareholder-friendly retail stocks that you can buy. Since 2004, the company has consistently raised its dividend, and since 2012, every couple of years, Costco gives out what is called a special dividend. Most recently, the company gave a $10 per share special dividend in December of 2020. And if the company stays on pace, investors are likely to see a similar payout sometime this year in 2023. Now, the good news for investors is Costco should be able to easily cover its rising dividend payments for years to come. Currently, the company pays $3.60 per share in dividends every year, and the company is scheduled to earn over $14 per share this year alone. You know I've got to have a tech stock in the mix, and this next company has gotten a ton of attention as of late with its investment into ChatGPT. But more importantly, the company has a long track record of growing its dividend, and of course, that is Microsoft, ticker symbol MSFT. Now, not only do you get consistent dividend growth with Microsoft, you get shares that have appreciated over 800% over the past 10 years. In terms of coverage, the company is expected to earn over $10 per share for the foreseeable future, meaning the current $2.72 dividend payout should continue to safely rise over at Microsoft. Now, next up is another retailer that's got an impressive history of increasing its dividend, and that is Lowe's. For over 3 decades, Lowe's has been raising its dividend payments, oftentimes north of 20% per year. Imagine getting a 20% raise every year. This most recent dividend hike came in at a whopping 32%. Now, good news is that Lowe's should be able to keep this up with the payout of $4.20 per year and earnings estimates over $13 at the company. It should be able to maintain solid dividend growth into the future. Now, before I get to the last dividend growth company that I really like, I want to talk about one company that might be on the verge of a long stretch of increasing dividends, and that's United Rentals, ticker symbol URI. The company just started paying a dividend for the first time in the company history at $5.92 per share. Management indicated that they want to continue to increase that. The good news is they likely can, considering the company is estimated to have over $40 in earnings per share for the foreseeable future. I think this company is going to be able to continue to raise that dividend. I wrote an article on this company and this topic on Seeking Alpha, and I'll have a link to that in the description below if you want to check it out. Now, finally, there's a ton of great dividend growth companies that could have made this list. Starbucks, Nike, Johnson & Johnson, Home Depot. The list goes on. I'm sure you can think of some as well, and let me know down in the comments which companies that you like. But the last company I have been holding for a very long period of time, collecting dividends and watching the shares just continue to go up. And of course, that is Apple, ticker symbol AAPL. Now, the company has disappointed me the last 2 times it's hikes its dividend between just 5 and 7%. However, the company is buying back the shares at a rate never seen before, so you do get that benefit as well. The real impressive thing is the potential here. Apple pays just 91 cents per share in dividends, yet earns over $6 per share in earnings. So there's plenty of room for growth for the years to come. Hopefully you enjoyed today's video, and if you did, consider hitting that like button and subscribing to the channel for more. Thanks for tuning in, and as always, good luck with your investments.